It's Soleil, and this is episode 70 of the Orange Pill Investor. I can't believe the last episode was 69, and I didn't even have any jokes about that. I must be getting too old for this shit. So woke up to a better situation in the 5K account. I mean, it's still down 5%, no 10%, but better than being down 20%. So I guess from the optimistic view, I'm gonna say it's up 10% today. But I mean, checking it every day is just for fun. You really, it's not about the daily fluctuations. This is a long-term perspective. So I'm not day trading this. And we can see here, and this is the double-edged sword part of selling covered calls. So talked about it before, but now we're actually able to see it happen. So bought these Hut shares. I think the average cost, if you look in Robinhood, it's going to say the average cost is like seven something. But with the covered calls that I sold against them, my true cost basis is a little bit under seven, maybe 690, something like that. So I felt comfortable selling the 7.5 strikes. However, if we look at Hut, it's up over 750 now. So technically, oh shit, it's actually 842. So it will cost me 68 cents to roll this. I would have made an extra $60 on this 100 shares. I have two calls, so on 200 shares. If I had not sold any covered calls, but my cost basis would have still been 750, and so I'd be up from 750 to 840. And that is the sacrifice. That's all. It's always been that way. So why would you sacrifice unlimited upside? The trade-off is a greater chance of success. When I bought this, I didn't know if it was going to go down, up, or trade sideways forever. So selling covered calls to me addresses all three of those. So I can still get some upside. So my cost basis is like 690, and I could still get 690 to 750 by selling this covered call, plus the 30 cents that I um, collected on the premium, and I'm totally fine with that. And it's funny too because the market just seems to be up like for no reason because Bitcoin is not even really. I mean, I guess it's bounced off of 60, 61, so maybe that's what it is. Maybe the market is breathing a sigh of relief that it didn't crash below 60 or something. Like, I don't know. But for me, if I go back a month, I mean, support is 50. That's where we had a big spike up. So for me, I don't really do technical analysis, but every once in a while I like to draw support and resistance at least. And if I had to draw support, I would draw it at 50. And at any time, historically, Bitcoin can just crash 20% below support. So when this was at 70, crashing to 42 would be, I mean, from 72 to 42, that's pretty brutal. 30K drop. But that would only be about, I'm going to say only, that would only be about 40% of Bitcoin at the top. And that is not really a big deal. So I'm sure the no coiners and the fucking normies love to see these fall and think that the average Bitcoiner must be crying themselves to sleep, but we really just don't care. Um, of course, you can't shut us up when Bitcoin is up, so your X feed is probably just like Bitcoin and MicroStrategy right now, and you know Bitcoiners just telling you have fun staying poor if you're not in the market and all that shit. But yeah, this could easily crash back down to this level right here. Yeah, so I draw this little kind of hiccup. I mean, really, if you really wanted to be, um, go back 3 months, you could say support is 42. The more lines you get for support, the better. And in order to get any support at this level, so I mean, I don't think that anything from 2022 really has any bearing. I mean, it's possible that people bought here and freaked out as this, and they've just been holding and holding and holding. But they would have, if they were just waiting to break even, they sold here, and maybe that was this hiccup. Maybe we had a little bit of hangover from these people that bought this, this, and this, and were waiting to at least break even. We had this little blip at 50, but I don't know. I don't think the market really has that long of a memory. Maybe it does. However, the point is, if I really, I mean, this is a nice support right here from 50 all the way up to 70. That's pretty legit support. So I'm comfortable going here, but really, I mean, it's not completely unheard of. I mean, we could drop 20% below 43, which would be like another 8 down. I mean, we could hit 35. I'm definitely not selling. I'm not selling any of this shit, waiting for this dip. That's definitely not happening. So anyway, I bought HUT when Bitcoin is setting all-time highs, so I knew this could be a risk, and I'm just that confident in the strategy. I'm just not worried about it really at all. So selling covered calls gives you some downside protection as well. I mean, it's not a lot, but gives you a little something. As the price is going down, it just makes it easier for you to buy back your call at the end of the week for cheaper. So still love to see stuff coming up. Mara average cost is 23, so this pumping back up from 19 is great. I did give myself a lot more call away value here because I think my cost basis only brought this down to like 21, 22, something like that. So I was trying to be very optimistic about getting a bounce. So even if this goes up another 10%, it won't cross my my strikes. And this is where the majority of my money is anyway. Marathon's like 2.5 times more expensive than HUT. HUT is basically my vehicle for reaching critical mass because I want to get to the point where I can buy. I want to be to the point where I'm collecting $800 of premium a week so that I can buy an extra 100 shares of HUT a week so that I can sell an extra covered call a week. In my other account and the account that I trade to my son, somebody mentioned CLSK on X in one of the threads, and so I checked this out and I added a contract. I couldn't afford it on this account because I'm already involved. I could have sold my Mara and get in here because they're roughly the same price. But yeah, the premium for this one's not too bad as well. Even midweek, this is Wednesday. I mean, 1% of 18 would be 18 cents. So let's say 20 cents. You can get a little over 4% on Wednesday. 4% for half a week. That's like 8% for the whole week. So this was cool. Um, I had my son get 100 shares, and I went ahead and got 100 shares. So we're trading CLSK. We were trading Mara, but then Mara got a little too pricey when it was up in the 20s. Yeah, so love to see green here. I bought that third of a share of MicroStrategy, and I look at this kind of just like a call option on Bitcoin. This could go insane. I mean, if this goes up 10x in the next year and a half, it's a little 500. Oh, uh, your average. Oh, that's average cost. That's not how much I actually spent. Yeah, so a third of that. I spent $500. I mean, that could go to 5 grand right there. That could get me to my 25K goal. That could get me 20% of the way to the 5K goal. Just letting this sit here and kind of getting lucky. That's cheating a little bit, maybe, because this is supposed to highlight the benefits of selling covered calls. So maybe I'll track the profits on this. Kind of just look at it separately. But I couldn't resist. I'm so hyped about MicroStrategy right now that it's a it's I want to be able to I want to be trading it everywhere I possibly can. I don't have enough money in my IRA to trade like a full 100 shares of MicroStrategy. So in that account, I am doing a poor man's covered call, and I'm kind of comfortable with that, even though it's a huge risk, and it's really the majority of my account. I could get completely wrecked, but my IRA, I'm not going to touch it for whatever, 15, 20 years anyway. So I really don't give a shit what it does in the next 6 months, 18 months, whatever. It is not going to affect my life in any way. All right, so that's it for the 5K challenge. I did actually, so I trade, my main account is on Tasty Trade, and maybe I'll start covering that a little bit. But Robinhood is actually, I mean, it's a very easy user interface. The only thing that they ever did that pissed me off is when they halted trading on GameStop. They basically colluded with the institutional players, and in a sense, I'll never forgive Robinhood for that. They were supposed to be for the little guys. They were advertising, no fees, and when I was trading my small account, that helped me so much because if I'm making $20 on a trade, I can't, I can't have high fees just sucking out all my profits. So in one sense, I have a lot of loyalty and I have a soft place in my heart for Robinhood, but at the same time, they really um, they really let me down with that GameStop, and I wasn't even big into that trade, but I was watching it happen and just on the edge of my seat, watching these hedge funds get wrecked, and it was fucking glorious. So they Robinhood helped let those fuckers off the hook, and it pisses me off to this day. However, I do most of my trading in Tasty Trade, and I also have a lot of loyalty to them. Tastyworks, Tasty Trade are the two names. I can't remember which one the YouTube channel was about, but I watched hundreds, maybe 1,000 hours of options videos and options research. They will back test things, and that was invaluable to me. So the fees are probably higher on Tasty Trade. There's a couple of things you can do to mitigate the cost. If you trade in increments of 20 contracts, like 20 options contracts, I think you get a little discount or something, like half the fees cut in half or something. I forget. But the cool thing but Robinhood, the user interface is very simple, and I've also had not very many problems. Like if I wanted to, for example, I own shares of Mara, and this would confuse the shit out of Tasty Trade. I actually could not do this. If I own shares of Mara, of course I can sell a covered call against it. The collateral for the covered call to prevent me from taking infinite losses are the shares that I own. That makes it a safe trade. And but creating a synthetic stock, you would buy something out here like a year from now, and keep in mind that I almost got completely blown up when the Fed raised interest rates by doing this. I was getting a little. My friend of mine said that I was eggheading it too much, and I had made a bunch of money in the stock market over a year or two, and I basically gave it all back to the casino in about a year and almost got completely blown up. But I eventually got my shit together and lived to see another day. So if you wanted to buy 100 shares of Mara, it would cost you $2,000. Now on margin, it would cost less, but if you don't want to trade on margin, you could go all the way down here to this $10 strike, get something that's close to a .9 delta. You don't have to go that low or high with the delta, but low in the strike. But the lower the safer, but it also gets more expensive. So instead of paying $2,000 for 100 shares, you could buy this LEAPS, long expiratory and no, long expiration anticipatory security. I can't remember if that's all the letters. But in order to construct a poor man's covered call, you would take something deep in the money like this, and then you could sell your covered call against it. So you spent what, 1,300. You sell the 22 here. That's like what, 3.5, 4% ish return on the 1,300 you spent. So that's pretty cool. And the higher the strike that you sell, the safer the trade as well. So you can actually, this is the other cool thing that Robin has, is it generates these little charts for you. So this is your risk profit that you stand to get on the leg of the contract you've already put in here. But if you add this sell call, now it's going to change this graph if it ever refreshes. So of course, if the stock goes down, you get wrecked. But if the stock goes up to your strike price, that's $22, that's your maximum profit because you're going to collect an increase on the leaps you bought, the long option, and you're also going to not lose the least on the call that you sold. So you'll be able to just sell this, buy this covered call back for nothing, a couple of pennies or whatever. Now, if the price of Mara goes up to $30, you're gonna make more on the leaps than you're losing on the call. But every dollar, you would have to buy this Mara call back. If it goes up to $3,000, the difference between the 22 and the 30 is $8, which is $800. So you'd have to actually buy this back for $800. You'd sold it for $50, have to buy it back for $800. But the value of this $10 leaps, and the reason why that 0.9 delta is important is you're going to increase the value of that option by 90 cents for every dollar that the stock moves. So you're going to have to pay $800 here, but the value of the leaps is going to go up by 90% of 800. So really, you could just sell that leaps. If you didn't have the money to cover this $800, you could just sell the leaps and bank the profit. So let's scroll this over to 30 again. So about $30, you'd make $90. So you'd lose 800 on the covered call that you sold, but then you'd make $893.71 on the leaps. But the reason why I even started telling this story is that Robinhood's code about whether they are going to let you make this trade or not will accept this because it's smart enough to know that 2 of the covered calls that I have are attached to the 200 shares of Mara that I own. And if I put this together, it's smart enough to know that this $22 covered call is actually covered by the collateral in this $10 leaps. But if I tried to do this on tastytrade, I don't know if they've updated their software since then, but it would not allow it. It could not understand that I have 2 different forms of collateral for the 3 covered calls. And then the other thing too, like if you want to be a degenerate gambler, you can come way out here and be like, all right, the farthest away expiring option I can get, as high a strike price as I can get, and I'll just buy this long, buy this long $50 strike on Mara, which basically means that Mara has to go above $50 by January 2026 in order for you to make any money. But not only does it have to go up to 50, it has to go up to 57.93. See, that's why they call it the break even here. It's the strike plus what you paid for it. It has to go up to 57.90 just to break even. So this would have to go basically to 60 by then in order for you to make any money. And if you had covered calls on shares and you tried to add, I guess this would still be considered a leaps, but it's not a deep in the money leaps. This would be like way out of the money. If you try to add something like this, Tastytrade would just be like, nah, dog, you can't do that, because it would consider you having a covered call at 22 and try to use this for the collateral, and that does not compute, because you could lose money on the covered call all the way up to 50, and this thing wouldn't start really gaining that much value. So Tastytrade got confused as shit, which I think they could never get it figured out, which is concerning. So their solution seems to have been, they just offer you extra accounts now. You want to trade different strategies? Get a frickin' another account. So now I have 2 margin accounts on Tastytrade. One, I have most of my stuff. I got like my shares of MicroStrategy. But I sold off a bunch of crap so that I could transfer money from that one to this new margin account that I got. And I want to construct a MicroStrategy poor man's covered call. Now this is dangerous as shit. And I'm not a financial advisor, so I'm damn sure not advising anybody to do this. But this is what I intend to construct. And MicroStrategy is down off its highs, but it's still up 3x from when it was 500. And I'll be setting up something that looks somewhat like this. I would want to go out a year, really. By the time I get this done, maybe I will go February. Let's just look at February. But it'll look something like this. Go down to around 1200. I don't really like the delta here. It's only 0.77, so it's not near that 0.9 that I was talking about. But in order to get me a 0.9, I would have to go so low. And I don't want to pay 80 grand for it. So even just to get a 0.84, I would have to buy the 900 strike and pay 80. I'm not doing it. So I'll probably grab something like this, and then I will sell. If my leaps was deeper in the money, I could get more aggressive with this, because the more closely to a synthetic stock it is, or the more close the synthetic portion of the stock, which is the leaps, to actual stock is, the closer it is to 1, really. 0.7 is not that close. 0.8 is getting better, but 0.9 is 90% of behaves 90% of what the stock would behave. So I might even go closer to 1600, maybe. Yeah, nice 0.2 delta out here. Let's add this and see what the chart looks like. Yeah. So max profit is always going to be right at your strike, but it's still profitable even if MicroStrategy went to almost 3 grand. So 2,900. This trade would still be profitable. So I'm cool with this amount of upside risk. MicroStrategy could basically double in a week. I mean, that would be sick if it did. Well, when MicroStrategy was ripping, how much did it go up in a week? It might be more dangerous than I'm imagining. So if you were in MicroStrategy on February 7th, so the 2nd was a Friday, Monday, Tuesday, Wednesday, Thursday, Friday. All right, so on Thursday it starts ripping. So from the 15th to the 15th. So 587. It went up like 150 bucks ish. And then again here, so a week later from the 23rd before it starts ripping again. So February, oh, there's no February 30th. So January 1st, that went up 300 bucks. That went up 50%. That went from 700, went up 50%. But it damn sure didn't double. So this just seems like a fairly reasonable trade to me. It's very risky because if you buy in here and it drops to here, the value of your leaps is going into the shitter. So even if I was a financial advisor, I don't know if I would even be able to recommend someone do a poor man's covered call unless it's just a tiny fraction of their account. And you could probably use the formula for that gamblers use. I'll have to figure out what that is again. But there's a formula that they use, and it's basically your risk versus your reward, and it allows you to manage your bet size to not go broke. So if you have $100, you shouldn't bet more than $5 on any one hand to make sure that a run of like 5 bad beats in a row won't make you go broke or something. But if you're betting $50 a hand and you've got $100, then you can just lose twice and you're done. Your account's blown up. So there's a formula for that, and you can kind of use that as really the investors would probably love that because it's all about diversifying your portfolio and making sure that you're not the size of your trades aren't too big. But yeah, as soon as I can get that money moved over to that second margin account, I'm gonna construct some kind of poor man's covered call in that second margin account on tastytrade. And it sucks. I hate having to manage 3 different accounts, one for the IRA and now 2 margin accounts. Whereas on Robinhood, I was able to do it all in one shot. But I wanted to do this 5K challenge, and it was going to be way too hard to be like, oh, okay, well this 5,000 is for this, and this 7,500 is over here, and this. So I just dropped everything out of this account until I had exactly $5,000 left, and then boom, just started trading. So it's just going to be easy bookkeeping. I started with 5K, so I'm down, 5%, 10%, excuse me. I'm down 10%. If I ever get positive, that would be nice. Well, it's only in a couple of weeks, so this is really just kind of all expected. Down, up, down, up. But over time, it should be trending in the right direction. All right, this is getting long enough, and maybe I'll post about it later and just list them all out in a post. But I thought it might be interesting for me to just highlight, where is it? What's on my TBR list. At the top of the list is SoftWar. I saw one of the best interviews that I've seen in months or years. So the best interviews, in my opinion, are almost always Michael Saylor. He explains all of human history, and I wonder how much of Michael Saylor's stuff this guy was involved in, because he talks about evolution and power since the beginning of human history. And I think Jason Lowry even went back to all of life history since the beginning of life sparked on the planet. It's all about amassing power and using it as a defense or a weapon to gain an advantage. But his interview was the first time since the What Is Money Robert Breedlove series with Michael Saylor, like what, 10 or 15 episodes or something ridiculous. And that to me is required viewing as a Bitcoiner. But I saw this guy get interviewed as well on the What Is Money channel. And it was the first time I was like, holy shit, I'm looking at Bitcoin in a completely new light. He's basically saying that Bitcoin is not even economics, it's power. And power can be used as a weapon, can be used defensively or offensively. And this guy's like a frickin' Space Force officer, and he's pushing this up through the chain of command as like a national defense initiative, national security initiative. Anyway, one of the highest priorities that he's basically saying this is of importance for national defense, basically. And he was annoyed that economists are even allowed to talk about Bitcoin. You know, he's kind of just like, keep Bitcoin out of your mouths. The Fed has no business even discussing Bitcoin because it should be the Department of Defense that has the ultimate say about Bitcoin, because it's essential for the United States to adopt it and protect itself against anyone else is going to adopt it and basically gain power from its adoption. So this is probably at the top of my TBR, my to be read list. I actually just finished this one, Upton Sinclair's. This is not Bitcoin related at all. Well, maybe. So it's called The Fasting Cure. And this one was great. He wrote this like 100 years ago, and he said the secret sauce for curing practically anything is just to stop eating. And you basically stop eating until you are better, or you just have to eat. And then you could fast again. But pretty cool. I would recommend anybody to give this one a shot. Trend following, and what is this one? Oh yeah, Stock Market Wizards. This one was recommended to me by the guy who got me into options investing in the first place, and that was like 2 years ago. So this has been on my TBR for quite a while. I actually finished No More Mr. Nice Guy, and actually started it over again. And this is essential for men, basically. And it'll, I don't want to say what it will do, but it could help you stop kind of being nice, but for an ulterior motive, and kind of ruining your relationships. So that's a good one. This is along the same lines as No More Mr. Nice Guy, but this one's When I Say No, I Feel Guilty. I've had this one highly recommended to me. Still haven't read it. This one is complete departure from the others, but I've had it on my TBR for so long. The gist I get is that they were kind of basically saying that the Christian faith kind of started out maybe as like people getting wrecked off mushrooms. So this caught my eye, and I've really been reading to read this one. And then this one, I started a couple of times, but then I just keep getting sidetracked. And man, being on X, I have been like posting nonstop. I've been recording 70 episodes in 3 months, and it's a lot. So that's me making excuses for myself. But I love Thomas Sowell. I've read several of his books, and he's right about almost everything. Well, he's right about everything that he says about liberals. Let's put it that way. So he considers himself a little bit of a conservative. So some of the things that he says positively about conservatives is wrong. But every criticism he has of the left is absolutely on point, and they're like, I mean, let's just let's just say what it is. They're completely useless. The conservatives are fairly useless as well because I don't think most of them actually believe what they say. I mean, if they actually were conservative, like they call themselves conservative, if they actually were conservative, they'd probably be worth a shit. But they're not. They gain power and then they just manipulate things for their own ends as well. So, uh, but Thomas Sowell is a freaking genius, and um, this has been on my TBR for at least a year. I I got to do it. There's no excuse for me to not understand basic economics. I mean, the other economics book that I'm excited to do as well is Safety Namus's Principles of Economics course. He's an Austrian economist, I think. So must be. I mean, I know damn well he's not a Keynesian fraudster slash criminal. So I'm assuming all of his economics are Austrian, aka real economics. Anyway, if anybody watched this far, I thank you, and maybe I'll post this list in my evening post. I generally try to do one video and one post, and then not kill myself making posts, but I just like to engage with the other people in my network uh, during the rest of my time on X, daily time. So, all right, I think that's it for now. Be good, y'all.